How well do you really know real estate contracts? Let's put your knowledge to the test with 50 questions covering key contract principles, agreements, and legal obligations you'll need to understand for exam day. And keep an eye on the bottom corner. There's something there that could make a big difference in your prep. We'll tell you how to use it in just a minute. Now, let's get started.
Let's get started with a review of the basics of real estate contracts. Essential elements of a valid contract. Which of the following is not considered an essential element of a valid real estate contract? Is it A, offer, B, consideration, C, verbal agreement, or D, acceptance? The answer is C, verbal agreement. A valid real estate contract must include offer, acceptance, consideration, legal capacity, and lawful purpose. A verbal agreement, while potentially binding, is not an essential element. Why is legal capacity considered an essential element of a valid real estate contract? Is it A, it ensures parties can understand and execute the contract, B, it guarantees the contract is written, C, it allows for verbal agreements, or D, it provides a lawful purpose? The answer is A, it ensures parties can understand and execute the contract. Legal capacity ensures that parties entering into a contract are of sound mind, age, and legally competent to understand and fulfill the contract terms.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
What role does consideration play in a valid real estate contract? Is it A, it validates the contract's legality, B, it represents the value exchanged between parties, C, it defines the contract's terms, or D, it ensures the contract is in writing? The answer is B, it represents the value exchanged between parties. Consideration is the value exchanged between parties, which can be in the form of money, services, or promises, and is crucial for the contract's enforceability. Which element ensures that a real estate contract is legally enforceable? Is it A, offer, B, acceptance, C, consideration, or D, lawful purpose? The answer is D, lawful purpose. A lawful purpose ensures that the contract's objectives are legal and not against public policy, making it enforceable in a court of law. What happens if a real estate contract lacks a lawful purpose? Is it A, the contract is void, B, the contract is valid but unenforceable, C, the contract is subject to revision, or D, the contract is valid if both parties agree? The answer is A, the contract is void. Without a lawful purpose, a contract is void, meaning it cannot be enforced by law, as it may involve illegal activities or violate public policy. Which of the following is an essential element required for a real estate contract to be valid? Is it A, a specified closing date, B, mutual consent, C, a notarized signature, or D, a witness signature? The answer is B, mutual consent. Mutual consent, also known as a meeting of the minds, is essential for a valid contract. Both parties must agree to the terms for the contract to be enforceable. Types of contracts express implied, bilateral, unilateral. Which type of contract is created when a real estate agent verbally agrees to sell a property for a client? Is it A, express contract, B, implied contract, C, unilateral contract, or D, bilateral contract? The answer is A, express contract. An express contract is formed through explicit verbal or written agreement. In real estate, verbal agreements can be binding, but written contracts are often required for enforceability. What distinguishes a bilateral contract from a unilateral contract in real estate transactions? Is it A, one party is bound to perform, B, mutual promises are exchanged, C, it is implied through actions, or D, it requires no consideration? The answer is B, mutual promises are exchanged. A bilateral contract involves mutual promises between two parties, while a unilateral contract involves a promise by one party in exchange for performance by another. A homeowner offers $500 to anyone who paints their fence. What type of contract is this? Is it A, bilateral contract, B, express contract, C, implied contract, or D, unilateral contract? The answer is D, unilateral contract. This scenario describes a unilateral contract where the homeowner promises payment for an act which becomes binding when the act is performed. In which scenario is an implied contract most likely to be formed? Is it A, a written lease agreement, B, a verbal offer to sell a house, C, regular payment for lawn mowing services, or D, a signed real estate purchase agreement? The answer is C, regular payment for lawn mowing services. An implied contract arises from the conduct of the parties, suggesting an agreement exists, such as when a person regularly pays for services without a formal contract. In a real estate transaction, if a buyer makes an offer and the seller accepts it, what type of contract is formed? Is it A, unilateral contract, B, bilateral contract, C, implied contract, or D, express contract? The answer is B, bilateral contract. A bilateral contract is formed when both parties make promises to each other, such as a buyer offering to purchase a property and a seller agreeing to sell it.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Statute of frauds and written requirements. Which of the following contracts must be in writing to be enforceable under the statute of frauds? Is it A, a contract for the sale of goods worth $200, B, a lease agreement for 1 year, C, a contract for the sale of a house, or D, an employment contract for an indefinite period? The answer is C, a contract for the sale of a house. The statute of frauds requires certain contracts, including those for the sale of real estate, to be in writing to be enforceable. This prevents fraud and misunderstandings in significant transactions. What is the primary purpose of the statute of frauds in real estate transactions? Is it A, to maximize profits for real estate agents, B, to prevent fraud and misunderstandings, C, to simplify the process of buying and selling property, or D, to regulate the commission rates of real estate agents? The answer is B, to prevent fraud and misunderstandings. The statute of frauds aims to prevent fraudulent claims and ensure clarity in significant transactions by requiring certain contracts to be in writing, including those involving real estate. Which of the following is not typically required to be in writing under the statute of frauds? Is it A, a contract to sell land, B, a prenuptial agreement, C, a lease agreement for 2 years, or D, a contract that can be completed within 6 months? The answer is D, a contract that can be completed within 6 months. The statute of frauds requires certain contracts, like those for real estate, to be in writing. However, contracts that can be performed within a year are typically exempt. Why is a written contract important in real estate transactions? Is it A, to provide evidence of the agreement, B, to allow for verbal modifications, C, to increase the commission for real estate agents, or D, to ensure the buyer gets a lower price? The answer is A, to provide evidence of the agreement. Written contracts in real estate provide tangible proof of the agreement, clarify terms, and are legally required by the Statute of Frauds to ensure enforceability. Let's continue with real estate purchase agreements. Offer acceptance and counteroffers. What is the legal significance of a counteroffer in a real estate transaction? Is it A, it accepts the original offer? B, it modifies the original offer without rejecting it? C, it rejects the original offer and proposes new terms? Or D, it binds both parties to the original terms? The answer is C. It rejects the original offer and proposes new terms. A counteroffer legally rejects the original offer, replacing it with a new proposal. The original offer is no longer valid once a counteroffer is made, requiring acceptance of the new terms. Which of the following best describes the concept of acceptance in a real estate purchase agreement? Is it A, agreement to all terms of the offer without changes? B, proposing new terms to the offer? C, ignoring the offer until it expires? Or D, signing the offer but with modifications? The answer is A, agreement to all terms of the offer without changes. Acceptance in real estate means the offeree agrees to all terms of the offer without modifications. Once accepted, the offer becomes a legally binding contract between the parties. In what scenario is an offer considered legally binding in a real estate transaction? Is it A, when the offeror signs the offer? B, when the offeree accepts the offer and communicates acceptance? C, when the offeror sends the offer to the offeree? Or D, when the offeree reviews the offer? The answer is B, when the offeree accepts the offer and communicates acceptance. An offer becomes legally binding when it is accepted by the offeree. This acceptance must be communicated to the offeror to create a contract enforceable by law. What is the outcome if an offeree makes a counteroffer in response to an original offer? Is it A, the original offer remains open for acceptance? B, the offeree accepts the original offer? C, both offers coexist for acceptance? Or D, the original offer is rejected and replaced? The answer is D, the original offer is rejected and replaced. A counteroffer effectively nullifies the original offer, creating a new offer for the original offeror to accept or reject. The original offer cannot be accepted after a counteroffer is made. In a real estate transaction, if a buyer submits an offer with conditions that differ from the seller's original terms, what is this action called? Is it A, acceptance? B, counteroffer? C, rejection? Or D, revocation? The answer is B, counteroffer. When a buyer presents terms different from the seller's original offer, it is considered a counteroffer. This effectively rejects the initial offer and proposes new terms for acceptance.
Stuck on a question? Just think of the Birdsey link in the description as your friendly neighborhood superhero, swooping in to save the day with answers. Feel free to explore it now and return to continue. Simply hit pause, and we'll be waiting when you get back.
Contingencies in purchase agreements. What is a common contingency found in a real estate purchase agreement? Is it A, seller's market analysis? B, financing contingency? C, buyer's personal preference? Or D, agent commission agreement? The answer is B, financing contingency. A financing contingency allows the buyer to back out if they cannot secure a mortgage. This protects buyers from being obligated to purchase without financial means. Why might a home inspection contingency be included in a purchase agreement? Is it A, to allow renegotiation if issues are found? B, to ensure the seller repairs the home? C, to confirm the home's market value? Or D, to expedite the closing process? The answer is A, to allow renegotiation if issues are found. A home inspection contingency gives the buyer the right to have the home inspected and potentially renegotiate or cancel the contract if significant issues are found. How does an appraisal contingency benefit a buyer? Is it A, it guarantees the home's condition? B, it locks in the interest rate? C, it prevents overpaying above appraised value? Or D, it ensures the seller pays closing costs? The answer is C, it prevents overpaying above appraised value. An appraisal contingency ensures that the buyer is not obligated to pay more than the appraised value of the property, protecting them from overpaying. What risk does a buyer face if they waive all contingencies? Is it A, faster closing process? B, lower purchase price? C, more negotiation power? Or D, significant financial risk? The answer is D, significant financial risk. Waiving contingencies can lead to significant financial risk, as the buyer commits to purchasing without protections against issues like financing failure or undisclosed property defects. What is the purpose of an earnest money contingency in a real estate transaction? Is it A, to reduce the down payment? B, to protect the buyer's deposit? C, to guarantee the seller's profit? Or D, to expedite loan approval? The answer is B, to protect the buyer's deposit. An earnest money contingency allows the buyer to retrieve their deposit if certain conditions are not met, such as financing approval or satisfactory inspection results. Termination, breach, and remedies. What is the primary consequence of a buyer breaching a real estate purchase agreement? Is it A, the buyer is entitled to a refund of the earnest money? B, the seller may retain the earnest money as liquidated damages? C, the contract is automatically terminated without penalties? Or D, the buyer must pay the full purchase price immediately? The answer is B, the seller may retain the earnest money as liquidated damages. When a buyer breaches a real estate purchase agreement, the seller may retain the earnest money deposit as liquidated damages. This compensates the seller for the time and opportunity lost due to the breach. Which remedy is typically available to a seller when a buyer defaults on a real estate purchase agreement? Is it A, specific performance to force the buyer to purchase the property? B, canceling the contract and retaining the earnest money? C, suing for punitive damages in court? Or D, requiring the buyer to pay double the earnest money? The answer is B, canceling the contract and retaining the earnest money. Typically, a seller can cancel the contract and retain the earnest money as liquidated damages when a buyer defaults. Suing for punitive damages is not common in these scenarios. When can a buyer legally terminate a real estate purchase agreement without facing penalties? Is it A, during the due diligence period if issues with the property are found? B, after closing if the buyer changes their mind? C, when the seller refuses to make minor repairs? Or D, if the buyer decides to purchase a different property? The answer is A, during the due diligence period if issues with the property are found. Buyers can terminate a purchase agreement during the due diligence period without penalties if they find issues with the property or financing, as this period allows for inspections and financial assessments. What is a common remedy for a seller if a buyer breaches a real estate purchase agreement? Is it A, forcing the buyer to complete the purchase? B, suing for emotional distress caused by the breach? C, doubling the purchase price as a penalty? Or D, retaining the earnest money deposit? The answer is D, retaining the earnest money deposit. A seller can often keep the earnest money deposit as compensation for a buyer's breach, which serves as a pre-agreed amount to cover potential losses. Let's look at contract law and performance. Assignment and novation. What is the primary difference between assignment and novation in contract law? Is it A, assignment transfers obligations, novation transfers rights? B, assignment involves all parties' consent, novation does not? C, assignment transfers rights, novation replaces a party? Or D, assignment creates a new contract, novation does not? The answer is C, assignment transfers rights, novation replaces a party. Assignment transfers rights under a contract to a third party, while novation replaces one party with another, requiring all parties' consent. Novation creates a new contract, extinguishing the original one. In which scenario is novation necessary instead of assignment? Is it A, when a party wants to be fully discharged from the contract? B, when only rights under the contract need to be transferred? C, when a contract is voidable due to misrepresentation? Or D, when a contract term needs modification? The answer is A, when a party wants to be fully discharged from the contract. Novation is necessary when a party wishes to be completely discharged from a contract, requiring the consent of all parties to replace one party with another. What is required for a valid novation to occur in a contract? Is it A, only the original party's consent? B, consent from all original and new parties? C, a written agreement from the new party only? Or D, a court order approving the novation? The answer is B, consent from all original and new parties. A valid novation requires the consent of all original parties and the new party. This ensures that all parties agree to the changes and the replacement of the contract. Which of the following is a consequence of assigning a contract without the obligor's consent? Is it A, the assignment is automatically void? B, the assignee assumes all liabilities of the assigner? C, the obligor must accept the assignment? Or D, the assigner remains liable for obligations? The answer is D, the assigner remains liable for obligations. Assigning a contract without the obligor's consent may not affect the assigner's liability for obligations. The assigner remains liable unless the obligor releases them.
Notice the code in the corner. When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Specific performance and legal remedies. In the context of contract law, which of the following best describes specific performance as a legal remedy? Is it A, an equitable remedy requiring the fulfillment of contractual obligations? B, a legal remedy involving the payment of monetary damages? C, a remedy that allows for the unilateral termination of a contract? Or D, a remedy that modifies the terms of a contract? The answer is A, an equitable remedy requiring the fulfillment of contractual obligations. Specific performance is an equitable remedy that compels a party to execute the contract according to its precise terms rather than awarding monetary damages. It is often used where monetary compensation is inadequate. Under what circumstances is specific performance typically granted by courts in contract disputes? Is it A, when the contract involves a large sum of money? B, when the contract involves unique or rare items? C, when both parties agree to terminate the contract? Or D, when there is a minor breach of contract? The answer is B, when the contract involves unique or rare items. Specific performance is typically granted when the subject matter of the contract is unique or rare, such as real estate or rare collectibles, and monetary damages are insufficient. Which of the following is not a requirement for specific performance to be granted as a remedy? Is it A, the contract must be valid and enforceable? B, monetary damages must be inadequate? C. The terms of the contract must be clear and definite. Or D. The contract must involve personal services. The answer is D. The contract must involve personal services. Specific performance requires a valid contract, clear and definite terms, and inadequacy of monetary damages. It does not require the contract to be for personal services. What is the primary difference between specific performance and monetary damages as contract remedies? Is it A. Specific performance is always preferred over monetary damages? B. Monetary damages are awarded only when performance is impossible? C. Specific performance requires actual performance, while monetary damages compensate for loss? Or D. Monetary damages are an equitable remedy, while specific performance is a legal remedy? The answer is C. Specific performance requires actual performance, while monetary damages compensate for loss. Specific performance compels a party to perform their contractual obligations, while monetary damages compensate the non-breaching party for losses incurred due to the breach. Time is of the essence clause. In a real estate contract, what is the primary purpose of including a time is of the essence clause? Is it A. to allow flexibility in contract deadlines? B. to ensure that deadlines are strictly enforced? C. to provide a grace period for performance? Or D. to enable renegotiation of contract terms? The answer is B. to ensure that deadlines are strictly enforced. A time is of the essence clause emphasizes that deadlines are critical and must be adhered to. Failure to meet these deadlines can lead to a breach of contract, allowing the non-breaching party to seek remedies. What consequence might a party face if they fail to perform by a deadline specified under a time is of the essence clause? Is it A. potential breach of contract and liability for damages? B. automatic extension of the deadline? C. no consequence, as deadlines are flexible? Or D. requirement to renegotiate contract terms? The answer is A. potential breach of contract and liability for damages. Failing to meet a deadline in a time is of the essence clause can result in a breach of contract. This can entitle the non-breaching party to terminate the contract or seek damages. How does the inclusion of a time is of the essence clause affect the interpretation of deadlines in a contract? Is it A. it allows for minor delays without penalty? B. it has no impact on deadline interpretation? C. it makes deadlines strictly enforceable? Or D. it provides a buffer period for performance? The answer is C. It makes deadlines strictly enforceable. The clause makes deadlines critical, meaning any delay can be treated as a breach. This changes the interpretation from flexible to strict, emphasizing punctual performance. Now, let's take a look at some specialty real estate contracts. Option contracts. What is the primary benefit of an option contract for the buyer in real estate transactions? Is it A. it obligates the buyer to purchase the property? B. it provides the buyer with the right to purchase at a set price? C. it reduces the seller's risks significantly? Or D. it automatically transfers property ownership? The answer is B. It provides the buyer with the right to purchase at a set price. An option contract allows the buyer to secure the right to purchase the property at a specific price within a set time, providing flexibility and time to decide without obligation. Which component is essential in a real estate option contract? Is it A. option fee? B. mortgage agreement? C. home inspection? Or D. lease agreement? The answer is A. option fee. An option fee is crucial as it compensates the seller for granting the option, making the contract binding and enforceable under real estate laws. How does an option contract affect the seller during the option period? Is it A. the seller can sell to any interested buyer? B. the seller's obligations are reduced. C. The seller cannot sell the property to another party. Or D. The seller must reduce the property price. The answer is C. The seller cannot sell the property to another party. During the option period, the seller cannot sell the property to another party, as the potential buyer has the exclusive right to purchase under the option contract. What happens if the option holder decides not to exercise the option in a real estate contract? Is it A. The option holder receives a refund of the option fee? B. The seller must extend the option period? C. The option holder can renegotiate the terms? Or D. The seller can sell the property to another buyer? The answer is D. The seller can sell the property to another buyer. If the option holder chooses not to exercise the option, they forfeit the option fee, and the seller is free to sell the property to someone else. Right of first refusal. What is a primary advantage of a right of first refusal in a real estate contract? Is it A. It guarantees the holder will purchase the property? B. It allows the holder to match any offer received by the seller? C. It requires the seller to sell the property at a fixed price? Or D. It eliminates the need for negotiation with the seller? The answer is B. It allows the holder to match any offer received by the seller. The right of first refusal allows the holder to match any offer received by the seller, providing a competitive edge to secure the property before others can purchase it. In which scenario might a right of first refusal be most beneficial to a potential buyer? Is it A. When the property is likely to receive multiple offers? B. When the property is unlikely to be sold soon? C. When the buyer wants to avoid any purchase commitments? Or D. When the buyer prefers a non-exclusive opportunity to purchase? The answer is A. When the property is likely to receive multiple offers. A ROFR is most beneficial when the buyer is interested in a property likely to receive multiple offers, as it allows them to match the best offer and secure the purchase. Lease agreements and purchase options. Which of the following best describes a lease agreement with a purchase option in real estate? Is it A. A lease where the tenant must purchase the property at lease end? B. A lease that automatically converts to a purchase after a set period? C. A lease that provides the tenant the right but not the obligation to buy the property? Or D. A lease that includes a clause for annual rent adjustments? The answer is C. A lease that provides the tenant the right but not the obligation to buy the property. A lease agreement with a purchase option allows the tenant to buy the property at a predetermined price within a specific time frame. This provides flexibility to the tenant while securing a future purchase price. In a lease agreement with a purchase option, what typically happens if the tenant decides not to exercise the option? Is it A. The tenant forfeits any option fee paid? B. The tenant must pay a penalty for not purchasing? C. The landlord must find a new tenant immediately? Or D. The purchase option is automatically extended? The answer is A. The tenant forfeits any option fee paid. If the tenant does not exercise the purchase option, they usually forfeit any option fee paid. The lease continues as per its terms until expiration or termination.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Let's continue now with disclosure and contract-related obligations. Seller disclosures and obligations. What is a seller's obligation regarding material defects in a property? Is it A. To repair all defects before listing the property? B. To provide a warranty for all defects? C. To disclose known material defects to potential buyers? Or D. To hide defects to secure a higher sale price? The answer is C, to disclose known material defects to potential buyers. Sellers must disclose known material defects that affect the property's value or desirability. This obligation ensures buyers are informed about significant issues that could impact their decision to purchase. Which document is typically used by sellers to disclose property conditions? Is it A, seller's property disclosure statement, B, purchase agreement, C, title insurance policy, or D, home inspection report? The answer is A, seller's property disclosure statement. The seller's property disclosure statement is a standard document used to inform buyers of the property's condition, including any known defects or issues. How does the seller's disclosure obligation affect the buyer's decision-making process? Is it A, it has no impact on the buyer's decision, B, it helps buyers make informed decisions about the purchase, C, it guarantees the property is free from defects, or D, it allows buyers to waive inspection requirements? The answer is B, it helps buyers make informed decisions about the purchase. The disclosure provides buyers with essential information about the property's condition, helping them make informed decisions about proceeding with the purchase or negotiating terms. What is the consequence if a seller fails to disclose a known defect? Is it A, the sale automatically becomes void, B, the seller must provide a discount on the sale price, C, the buyer is responsible for repairs, or D, the seller may face legal action from the buyer? The answer is D, the seller may face legal action from the buyer. Failing to disclose known defects can lead to legal action from the buyer, who may seek damages or rescission of the sale due to misrepresentation.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.